Good afternoon, financial professionals. Abby Fletcher here of E4 Insurance Services, welcoming you to The Brew, building relationships every week. Thanks for tuning in today. For those of you joining The Brew for the first time, we like to start the Brewcast by celebrating today's National Day for November 11th. It goes without saying that today is Veterans Day. Today we honor the members of our military in all branches, past and present. Thank you, veterans, for your service and for all that you do to keep our country safe and strong. Also, November is Long-Term Care Awareness Month, an entire month dedicated to the importance of long-term care. For those of you on our mailing list, you'll notice that there's a long-term care theme this month. If you're seeking some long-term care inspiration, your friends here at E4 are standing by. We love long-term care all year round, but especially this month. Lastly, November also starts the month of Movember, also known as No Shave November. This month, men are encouraged to grow out their facial hair to bring awareness to men's health issues, including mental health as well as cancers that directly affect men. That's right, fellas. We are supporting you and your health this month, and we are looking forward to seeing these epic mustaches and beards you're working on. So thank you, veterans, for your service, and have fun this month growing out your facial hair and sharing the many benefits of long-term care with your clients. Today on The Brew, we have our partner, Richard Thoma, who serves as sales manager of Securian. In honor of Long-Term Care Awareness Month, Richard and John will be sharing details about their long-term care and critical illness solutions and their importance in your client's financial plan. Feel free to use the chat box below. While Richard and John are live, I'll be keeping a lookout for your questions and thoughts so we can answer them in real time. And also, all attendees are in a drawing for a prize, so stay tuned. We'll be announcing the winner shortly. Thanks for tuning in. And without further ado, Richard, welcome. The mic is yours.
Abby, thank you so much. Thank you for inviting John and I onto The Brew today. First and foremost, on behalf of Securian Financial, I want to recognize any veterans who are tuned in today. We appreciate your contributions to this country, and on behalf of Securian, just want to say a hearty thank you. Again, I'm Richard Thoma. I'm the regional sales manager at Securian Financial. I'm joined by John Thomas, who's our regional vice president, working with our Secure Care Link benefit product. And when they asked me to join The Brew today, I thought there couldn't really be a better conversation to have in November than the long-term care conversation. As Abby mentioned, of course, it's Long-Term Care Awareness Month, and Securian has really got a full gamut of solutions that runs across the full age spectrum and the full cost spectrum, really, that can help you solve your clients' long-term care needs. Now, I wanted to make sure I read just a few statistics that talk about long-term care. And when you talk about long-term care, it's not just talking about the patient, it's really talking about the effect long-term care has on the entire family. You guys have probably heard the stat that 70% of men and women over the age of 65 will need some kind of long-term care at some point in their life. That's not necessarily a new stat for you guys. But what you might not have seen is that 78% of adults who are getting long-term care at home rely solely on family and friends for the assistance. The average caregiver is 46 years of age and spends 21 hours per week assisting the patient or family member. Over 90% of family-based caregivers have to alter their work schedule permanently due to caring for their loved one. 29% had to use their own out-of-pocket money in providing care. And the number that really strikes me is over 40% of caregivers had to switch from working full-time to part-time. So when we're talking about the conversation, it's not just the patient in long-term care. Long-term care is a family event. As you guys can see, and I'm sure you could think anecdotally in your own life, long-term care affects everybody in the family. And that's why I think Long-Term Care Awareness Month is so important. It's to bring light to some of these issues that we might not be talking about enough. So when I talked a little bit earlier about Securian's full gamut of products, I want to cover our chronic illness conversion rider for term, and then our riders for the permanent products. So I don't think this comes as a shock to you, but the older you get, the less likely you are to be approved for a long-term care or chronic illness rider. The numbers we have available shows that 84% of folks below age 50 are able to qualify for long-term care or a chronic illness rider. But once you hit age 65, that number goes down to 68%. So right around 2/3. So 1/3 of folks aren't even able to qualify. So the numbers show the younger you are, the more likely you actually are to be able to get chronic illness coverage. So with Securian, we've got a rider that's so incredibly unique that I think it should be on every term policy we sell. It's something called a chronic illness conversion agreement. And the chronic illness conversion agreement, you put it on your term product, and when you convert it to a permanent product, you can add a fully underwritten chronic illness rider without proving insurability. So again, you convert the term to permanent. You add a fully underwritten chronic illness rider without proving insurability. So this rider is perfect for your clients who are, let's say, 35 to 45 years old. They're purchasing term for income replacement. They're protecting their mortgage. This is a great way for you guys as agents to add value to a term sale that's normally just super transactional. You can have that conversation about buying that option to lock in insurability. And then every year from there, you could talk about conversion at the annual review. This makes the term something much different than just the spreadsheet sale. It doesn't add a lot of cost. We've got a permanent rider for our products. We've got the Eclipse Protector 2 and the VUL Defender. Both of them are permanent products with a death benefit guarantee available. And those permanent products with the death benefit guarantee, you could put the chronic illness rider on there and draw down on the death benefit dollar for dollar and use that for a chronic illness episode. So just as a reminder, chronic illness and long-term care are defined the same way. 2 of the 6 activities of daily living deficient or a cognitive impairment. We'll give you up to 4% of the death benefit per month, and it's a cash indemnity basis. So as we were talking about earlier with caregivers, how caregivers, a large percentage of them are taking money out of their own pocket for care. This is a good way to help compensate the caregivers. Even though they might not be licensed, there's still family members giving you care and incurring expenses. And using a cash indemnity rider is a great way to help recoup some of the costs. Now with that, we talked about the chronic illness conversion for the term. We talked about the permanent rider, the chronic illness rider on our Eclipse Protector and VUL Defender. And I'll turn it over to John Thomas, our Regional Vice President for Secure Care, our Link Benefit product, to talk a little bit more about that and how it can fit some of your clients' needs.
Yeah, thanks, Richard. Appreciate joining the call with you all this afternoon, and E4, thanks for inviting us on. If I may share a little bit of my story. So I'm on the older end of millennials. I hate claiming millennials, but I'm somewhat young. But I've become a long-term care wholesaler, passionate about selling long-term care. And part of it is because of my grandfather. My grandfather actually passed this summer. My grandfather was a World War II vet. He was one of the few African-American soldiers that stormed the beaches of Normandy, and he was in the Army and involved in the Normandy battle. And when he came home from World War II, he settled in small town Ohio with my grandmother and built his home. And one of the saddest moments in my family's life was moving him from this home that he built after coming home from the war, living in his whole life, and taking him from that home and moving him into a nursing home. It was a tough decision in our family. It was a decision that we didn't make lightly, but did not have the resources to care for him in his home. And when we moved him into the nursing home, he cursed my father and told him he was a no good son, and the end of life in that nursing home was challenging. So I know many of you have had experiences like that in our family, and I thought it was pertinent in your family and pertinent to share in honor of Veterans Day. I am proud of his service, and I know many of you are proud of family service, or if you've been in service yourself, right? But care and long-term care, really elder care, as Richard set up the conversation, is part of the financial planning process, right? And we often plan for what I think of as phase one of retirement, right? That is what we all look forward to. We work, we retire, and we want to live the good life in retirement, right? That's phase one. Phase two is what we often don't plan for, and that is elder care or aging in place to the point where you need some care, you need some help, right? And Richard said that a lot of that help, a lot of that care happens from family. He's exactly right. About 2/3 of care actually is provided by family. But believe it or not, those caregivers, as Richard said, lose on average about $300,000 of their own income to care for loved ones. So there's a significant cost and risk to our society providing care for our elders. Right. There's a great report that LIMRA, the life insurance organization, and Life Happens, the life insurance nonprofit, put together. It's an annual insurance barometer report. Long-term care and elder care has become in consumers' mind more and more of a financial concern. The last 2 years, that report lists out the hierarchy of financial concerns that consumers have. The first concern, of course, is financial success in retirement, making sure I have enough money to retire. The last 2 years, long-term care costs and expenses have become the number 2 concern of consumers when they look at the hierarchy of financial concerns that consumers have. So not only do we understand the risk as financial planners, but we know that consumers are aware of that risk, and they're aware and thinking about and concerned about those costs. So the product Secure Care that I represent, if you're not familiar with it, it's an asset-based long-term care product. And what asset-based really means is that we're using or utilizing clients and consumers' assets, their savings and investments, and repositioning those assets into an insurance vehicle that gives leverage for long-term care. It's interesting, and it's a different approach than maybe a long-term care rider on life insurance. Long-term care riders on life insurance, they do a great job as a transition benefit, right? For someone that has protection need, we buy them life insurance, and we add this rider that says once that protection need's no longer there, maybe your home's paid off, your kids are in college, you don't need the death benefit as much anymore. That benefit can transition to cover your long-term care costs later in life. The Secure Care product, the target market is those folks that are already near retirement. Maybe they're in their late 50s or early 60s, they're about to retire, and they don't have long-term care protection in place, but they've got savings. They've got some money in a CD, or they've got some fixed assets that aren't earning very much, and we can take that and reposition it into a solution that gives them long-term care coverage. I'll give you an example. We have a 60-year-old, let's say male or female, and they're thinking about buying something to protect for long-term care, right? Maybe they've got $100,000 in a CD. It's earning something dismal right now, right? We can take that $100,000 that's in a CD, reposition it into Secure Care, and it will give them 4 or 5 times leverage on that $100,000 that they've invested. So that $100,000 turns into, let's call it $500,000 of long-term care protection. We can add inflation, and that bucket of money can grow. But the key here with this solution, we call it live, quit, or die. It's like a Swiss Army knife of solutions, right? That you live, you have long-term care benefit. You've used your current assets, you've repositioned them to give you long-term care. If you die, there is a death benefit that's going to pay your portfolio back or your estate back more than you invest, or at least what you invested. Or if you quit, there's a return of premium. You can cancel the policy after 5 years. There's a vesting schedule. After 5 years, you cancel it, and you can get your money back, 100% return of premium. So really, you're covered. You get death benefit, long-term care, and return of premium with a investment. And that investment can be structured. It's often a one-time repositioning of assets. But you can structure it. You can do it in installments of 5, 10, even 15 years over a period of time to create this type of leverage in a paid-up policy. And one of the keys with Securian and Secure Care and all of our long-term care benefits at Securian is they are paid out as indemnity benefits. Indemnity benefits means that benefit is cash, and really it's income to meet your long-term care costs. So for those individuals that are providing care within their family, for the 2/3 of individuals that are providing care for loved ones, they're not utilizing qualified caregivers. That income really can help those individuals either pay family. It will boost their overall income, because their income needs don't disappear when they need care, right? And so it'll boost their overall income and help their overall financial situation. Or they can pay for a qualified caregiver earlier than they would have been able to earlier. And so having a cash benefit with Securian Solutions is critically important to addressing the full scope of needs in an elder care situation. So appreciate it, Richard. Appreciate you inviting me to tag team with you and share a little bit about Secure Care.
Thanks, John. Thanks, Richard. I've opened up the line if there are any questions from the audience. And Richard, John, I was familiar with family members typically being the long-term care providers, but that was an interesting stat that 40% of these family members moved from full-time to part-time. That was compelling.
Mm-hmm.
Any questions? I didn't see any in the chat box either, so hearing none. Richard, I'm going to ask you to look into your virtual top hat. Won't you give us a number between 1 and 21?
1 and 21. Well, for anybody who knows me personally, I'm a Green Bay Packer fan. And actually, last time I was on this call, I think I picked the number 4 for Brett Favre. So this time I'm going to do the number 12 for Aaron Rodgers.
Okay. Who's the winner? Who's the winner for number 12? And while we're waiting for that, Richard, John, for the members of the audience that attended, if they, obviously we're inspired by your conversation today, but should they want more information, what route should they go?
You could feel free to reach out to John and I directly. My email is richard.thoma@securian.com. And of course, we've got john.thomas@securian.com. And of course, the fabulous team at E4 can easily connect you with one of us, depending on the question.
Thank you. Oh, excellent. Looks like Brian. Yes, Brian Grant is the winner of today's coffee card. Be on the lookout, Brian. You'll be receiving a Starbucks gift card from all of us here at E4 Insurance Services. Thanks for joining. Also, tune in next week. We'll have Matt Pletzer of Lift Consulting sharing social selling strategies and ways to build and expand your center of influence. Thanks, friends, and happy Veterans Day.